Hello friends, welcome to TQR 5. I am Sharad Vaze, practicing chartered accountant for more than 39 years. Today, one of our professional, CA Hemant Godbole, received one query from his audience. I am just going through the question and let's see the answer of it. Quote, my husband has salary income and I have also salary income. From last 1 month, we have opened joint account in which we transfer whole salary of both of us in this joint account. In this joint account, primary account holder is my wife and every month we are transferring the amount to fixed deposits. Then my question is the interest amount of FD is to whom taxable? And we have also made some FD in joint account which include the income of both husband and wife. Bank cuts whole TDS from wife's PAN number. Waiting for your reply. Thank you for the question that you have raised. This is practically followed in most of the cases, especially in India. But as a matter of principle, from taxation point of view, the burden of income tax department is to prove a particular receipt is income. Because receipt is not taxable, income is taxable. So the responsibility, or what we call it in law, burden, is on the income tax department to prove that a particular receipt is income. And the burden falls on the taxpayer once it is proved that it is income, then in whose hands it is taxable, as well as whether it is exempt from tax, the burden lies on the taxpayer. Now in this case, both husband and wife are earning salary, so the question of proving income does not arise. But in whose hands it is taxable? Let us see. Now, if you have opened a joint account and where you are transferring the entire salary to this special account, and where from probably you are making your household expenses, and again from that amount you are transferring to a recurring account or a fixed deposit account on which interest is received. Technically speaking, the share in every fixed deposit that has gone through from this special account, then proportionately each fixed deposit holder is owner for the purpose of income tax. Now let us see the example. If A has got a salary of rupees 1 lakh per month, net salary, take home salary, and his wife Mrs. A has a take home salary of 50,000, and both contribute to a common joint account, or it is credit transferred to a joint account. So annually about 18 lakhs are received in that account. Of that, let us assume that 6 lakhs have been used for your household expenses, and balance 12 lakhs is left in the account. Of that, a fixed deposit of say 12 lakh is made in its entirety, and on which you will get interest. Now this interest will have to be taxed, offered to tax in the proportion of contribution. That means A's contribution being 12 lakhs and Mrs. A's contribution being 6 lakhs, the interest on fixed deposit should also be taken into that proportion 2:1, and accordingly taxable in the respective hands. 2/3 in the hands of A and 1/3 in the hands of Mrs. A in respect of interest received. It is quite likely that the entire interest income will be credited to Mrs. A's account because Mrs. A's name appears first on fixed deposit, and entire tax will be deducted at source. Nonetheless, 2/3 income is taxable, and it is possible under the present mechanism of e-filing, 1/3 TDS can be claimed by Mrs. A and 2/3 TDS can be claimed by Mr. A. and in the return of Mr. A, he will show 2/3 interest on fixed deposits and also claim 2/3 TDS, and Mrs. A will show 1/3 income in her return of income and 1/3 amount of TDS as to her credit. But practically, it becomes difficult to prove or justify, because if the assessing officer may say that the out of 18 lakh rupees contribution to a particular account, 6 lakhs were household expenses were incurred by Mrs. A alone because her salary is 6 lakh. So entire 12 lakh rupees deposit interest is to be taxed in the hands of Mr. A. Or assessing officer may consider that out of 12 lakh salary, 6 lakhs has been spent for household expenses. So 6 lakhs is the saving of A and 6 lakhs entire salary being saved by Mrs. A. So interest should be taxable in 1:1 proportion, that is 50% in A, 50% in Mrs. A. Obviously, corresponding proportionate TDS credit will be available. Now, the burden lies on the taxpayer to show how much income is taxable in whose hands, because if there is improper disclosure, or what in law it is called underreporting of income or misreporting of income, then it will be subject to a penalty. So it is advisable in such situation that you can have a special account and transfer some amount for the purpose of household expenses to this joint account, and from this joint account incur your household expenses, keep your salary accounts intact, so that it will become justifiable. It can be easily proved what is your share of income and what is the share of your spouse's income. I think I have clarified the issue, but still, as we always say, that kindly consult your tax professional before taking any decision, because all the facts may not be known or there might be change in law in between. Thank you very much.